Hello, my name is Randolph Love. I'm a licensed and bonded public adjuster in the state of Florida. I'm also a knowledgeable insurance appraiser and the host of the EntrepreNudist podcast, a place to hear real entrepreneurs and business owners bear it all. Today, I'm going to be talking to you about the 6 characteristics of an insurance contract. 6 characteristics of an insurance contract. And for those of you that don't know, an insurance contract is an insurance policy. Okay, so one of the characteristics is it is a personal contract. What does that mean? That means it insures the person, not the item. It insures the person's financial interest in the item, not the item itself. So that's why when someone sells a car to someone, that new person has to get their own insurance. When someone sells a home to someone, that new person has to get their own insurance. When someone says my home is insured, or they say my car is insured, what they're really saying is my financial interest in that home is insured. My financial interest in that car is insured. Second characteristic is an insurance contract is a contract of adhesion. What does that mean? That means one party writes it down, they makes the term, and the other person either says yes or no. They either accept or decline the terms of that contract. There's no negotiation. So on the front end, of course, the insurance carrier has the benefit because they're the ones that are writing this down and they're saying yes or no. On the back end, let's say something comes up and there's a dispute of ambiguity, meaning that basically there's a term or a phrase in here that it could go multiple ways. If that happens and it should go to court, the court typically gives it in favor of the non-drafting party. And when you're dealing with an insurance contract or policy, the non-drafting party is the insured, the homeowner, the business owner. Third characteristic is it's a contract of utmost faith. What does that mean? The insurance carrier expects that everyone who is applying for an insurance policy is going to be completely honest about the risk that this insurance company is deciding to take on. That means if you're trying to get auto insurance and you have violations for driving drunk, the insurance carrier expects you to say that. Or even if you don't have any known violations, they actually expect you to say, hey, on a regular basis, I drive drunk, Or if there's something about your home that is typically uninsurable or something like that, there are any factors in your home that's not typical, they expect you to let them know. But utmost faith doesn't just apply to the insured. The insurer's utmost faith is that they're going to pay in the event of a covered event happens. So that's why you hear about a lot of people talking about bad faith claims, because if it's supposed to be a covered claim and the insurance company isn't paying it, you have to go and hire people like myself, a public adjuster or an insurance appraiser or an attorney to help you get the rights that you should have had from the first jump under your policy. That's when you potentially have what they call a bad faith claim. This person didn't act in utmost good faith. Therefore, any fees or penalties, they should be assessed to them, and I should get whatever I'm supposed to get. Another characteristic is it's an aleatory contract. What does that mean? It's an unknown future event. You could be an insured and you could be paying for years, even decades, and never experience a claim. Or you can make your first premium, and next thing you know, you have an event that happens to your insured property, your home, that causes the the limits to be exceeded. That's an aleatory contract. And the insurer only pays in the event of a covered loss in that situation. So once again, it's left to chance. It's an unknown event. We're signing this I have no idea how much money I'm going to get from you. You have no idea how much money I'm going to ultimately get from you, because of course you know what your premium is for the year, but have no idea how much money I'm going to ultimately get from you, and I have no idea how much money I'm going to have to pay you in covered claims. Another characteristic of an insurance contract is it is a unilateral contract, meaning only one party has the obligation to perform. Now, the insured does make a promise at the beginning. They promise to pay the first premium. After that, they can stop paying anytime they want and void the contract. However, the insurance carrier has to pay if there is a covered event and this policy is enforced. So once again, only one party has the obligation to perform. But most contracts are usually bilateral, meaning that one party has an obligation, this party has an obligation. For example, if you buy a car, then you agree to pay for whatever that person is asking you for, and that other person agrees to sign the title over to you. That's two parties agreeing to perform. The last characteristic is an insurance contract is a conditional contract. It means it only performs if certain conditions are met. And for public adjusters like myself, or someone who is planning to handle their own insurance claim, that means if you have a claim, before you have a claim, you need to be going into your policy and looking into duties after a loss. Duties after a loss basically says point by point what the insurance carrier expects you to do in order to allow them the opportunity to investigate your claim and pay you in a timely manner. If you do not do any of these conditions, an otherwise covered loss could be refused. All right. And another condition, of course, it has to be the insured property, and it has to be an insured covered event. But after that, your policy could say without a doubt, emphatically, that you need to be paid for a covered loss. However, if you just miss one thing, in your duties after a loss, that could give the insurance carrier the right to refuse all coverages. Now, there are some situations where even if certain duties aren't met, the carrier allows certain substantial compliance and you can proceed, but you don't want that. You want to do everything that you're supposed to do to where those conditions are met. You don't want to leave anything to chance. And that means reading your duty after a loss prior to an event, and or hiring a professional that can read that after the fact and apply all of those conditions and make sure you're taken care of. Once again, my name is Randolph Love III, licensed and bonded public adjuster in the state of Florida, insurance appraiser, and host of the EntrepreNudist podcast, a place to hear real entrepreneurs and business owners bear it all. Let me know if you have any questions, if you need to add anything to this. Did I miss anything? Let me know. Looking forward to help. Let me know any other topics you want me to talk about. Good talking.